Hoodie FX YouTube channel. My name is Ron. I'm excited. I realized I gained about over 60 new subscribers since my last video. So welcome you guys. I hope you guys enjoy my channel. Been learning some things on my channel, and like I said, I'm going to continue to just keep dropping videos. So today I want to talk about this NAS100 setup I sent out to my signals chat and my mentorship chat. This was a great trade. I just want to kind of break it down for you guys and show you guys the thought process and how the trade went down. So here we have NAS100. Now obviously we are in a downtrend, right? But when it comes to liquidity, right, sometimes liquidity can drive price a certain direction first before it decides to reverse. So in my eyes, when Nas broke this high right here, right, grabbing this area of liquidity here, delete that, we notice a shift. So you see how price kind of just shot up and took this high out right here, grabbing this pool of money that was sitting here. Okay. So once this money got pulled, right, or this money got taken out, we noticed that a fair value gap was left behind. Now, in my other videos, I talk about I like seeing the break of structure with a fair value gap on the leg of the move that take out the high, or the low, depending on if you're selling or buying. In this case, we're looking for buy, so we expect this high to get taken out first for a retracement for a bigger move. So when this high got taken out, instantly I thought, well, I want to look for an entry around here, at the fair value gap. Okay. So we had a beautiful fair value gap here that we was anticipating. Okay. So this fair value gap created, well, this fair value gap was on the leg of the explosion move, which is why this fair value gap I'm using, because this is the leg that took out the high right here. Okay. So when this liquidity got taken out, I'm looking for a buy back into the fair value gap to rebalance price. All right. Because think about it, this explosive move that occurred here, it left a gap in price. Okay. So price likes to, come back and refill that imbalance of price, right? That inefficiency of price, and then continue to rally higher. All right. So right now all we have is just, the break of structure, fair value gap. Also you want to double check and see if price is in a premium or a discount. As you can see, price is above the 50%, so that means it's in a premium. All right, so since price is in a premium, we're not looking to buy at the top of the fair value gap. Why? Because price isn't below the 50% mark, right? So that means anywhere above the 50% is a obviously area for sellers to keep on selling down, or preferred sellers. So we don't want to buy in a seller's environment. Okay, so what we have to do is be patient and wait for price. Let me just line it up better. Wait for price to go below the 50%, but also look for entries inside the fair value gap. Even though it already touched the fair value gap, the better side of the fair value gap to enter off of would be anywhere below the 50%, like that. Okay. So right now we have to be patient and wait for our entry. Now let's also double check and see if this is an optimal trade entry. Now 9 times out of 10, when price is pushing below the 50%, it typically likes to go near that. It's typically automatically going to be optimal trade entry. Okay, because anything underneath the 50% is obviously the 62%, the 70.5, and the 79. So this obviously makes sense that if price does go into the discount area, then we're most likely going to be inside of an optimal trade entry. Okay, but as you can see, the optimal trade entry, the likelihood of you want to look to enter is around this area here. But like I said before, anywhere below the 50% was valid. So right now, this was the trade idea. So we had to break a structure to grab a liquidity. Price returns back to the fair value gap to fill the inefficiency of the candle. Now we're looking for price to push higher. Okay. So now what we're going to do is press play. And we see that price, not only did it hit the optimal trade entry, right, but it's also deeper past the 50%. And we can see that price is officially inside of our discount. What I'm going to do is I'm going to add on Let's see what fib is it. Okay, this one. All right. So we can see price went below the 50%, right? Went below the dealing range level, right? Into the discount inside the fair value gap. And remember, it hit the optimal trade entry as well. So now we in the buy for US 30. I said US 30. NAS100, right? The NASDAQ. So now we're in buys for NASDAQ. This was my entry right below here. As you can see now, price is now rallying. All right, now my targets when it comes to this trade will be liquidity area. So I was obviously looking at this area as a target 1, this area right here as a target 2, and then possibly all the way up here for a target 3, because we have a bunch of wicks up there and a bunch of orders up here. So this would be my 3 targets. So 1, 2, and 3. Stop loss. When it comes to stop loss, when I'm entering fair value gaps, I like to have my stop loss just underneath the candle of the fair value gap, the wick of it. So my stop loss typically is here. If I want to be very aggressive, if I want to be conservative, I'll put it at the recent low. All right. But this is NASDAQ, so I'm tend to be a little bit more aggressive on NASDAQ because, you know, the more amount of pips that you risk, that you're risking more money on NASDAQ. So you got to be very careful. So I like to be aggressive with my entry, so I'll move my stop a little bit tighter. But you know, whatever comfortable to you, whatever fits your comfortability. But me personally, I like having my stop here, right at the end of the fair value gap, but the wick of it. Okay, not the body, the wick. Because sometimes price could push down to the body and then buy. So you want to make sure you give it just enough room, just in case it does want to reverse when it gets down there. All right, so now our target areas are obviously going to be here. Obviously this will be target 1, target 2, and target 3. So now when we press play, we can watch this unfold. Okay, so price hits target 1 there, hits target 2 there, and now this is current price action. So right now it's on its way, probably Sunday, it's on its way towards the next target. Okay, so as you can see though, why was this buy efficient or very, very, very precise? Well, once again, we had to break a structure, return into the fair value gap, remember below dealing range, also optimal trade entry, so it completed a lot of our confluences, and yeah, so we kind of just we like, there's nothing else to really do, you know, just enter the trade and let it fly, and that's typically what I do. So other than that, y'all, that's the video. If you enjoyed, please leave a like, and subscribe if you're new, and leave a comment as well. Let me know how you feel. Did the video help? You know, all things are appreciated. So until then, guys, I'm gonna see you guys in my next YouTube video. Take care.